What is up? What is up? What is going on, ladies and gents? Eddie Harvey coming to you live. Hope you all are having a fantastic day. Hopping on here, guys, and I want to talk a little bit. Let's talk about analyzing trades and getting into the market. So, guys, there are two ways I want to share with you guys, ways you can analyze the market to look for potential trades to get in. So before, obviously, unless someone is giving you a trade setup, right? You have to analyze the market, guys. You have to analyze the market to make sure that the trade that you are looking at, uh, the market conditions are right for you to get into that trade. Because there are times when you can jump in a trade, right? And that trade just goes against you. It goes haywire. It's not going the way that you expected it to go. And sometimes part of that is due to different factors. So the first thing I want to talk about, guys, which can cause a trade to go bonkers, go crazy, that you entered it in, guys, is through, man, I'm drawing a blank here. You have different types of analysis, man. I'm sorry, I'm drawing a blank. You have technical analysis, and I'm drawing me a blank. Technical analysis. Oh my gosh, Lord, I don't know my analysis right now. My bad. Excuse me, fundamental analysis. That's what I'm getting at. Sorry, technical analysis and fundamental analysis. So fundamental analysis, guys, let's talk about that. This can cause a trade to just get out of control and go against you. Just like that, you can be in a trade like, yo, what just happened? And it's probably because you didn't check the news. So news is important to trades. That's why it's very important before you enter into a trade. You always want to just scope the news and see what is going on in the market. So you want to check a pair and check that pair out and see if there's any news going on that pair, meaning if it's different levels of news. You have low volatility, medium volatility, and high volatility. Meaning that if it's obviously low volatility, it should be good. Medium, you can, 50-50. And if it's high volatility, that pretty much means you want to stay away from trading that specific currency because there is some high volatility or high impact news that can cause that trade to either go the way you want it to go or go against you. So when people, if you're in a trade and you see things are going and then boom, you might get a candle that just goes completely. If you're in a buy and it's tanking for a sell, then I mean, it was probably some negative news, some high volatility, high impact news around that currency that was negative, and it caused that currency to tank. Okay. Or on the vice versa, if you were in a sale and that pair was that currency was like the secondary currency and it would go up. So it's just like you have to pay attention to the news. So as always, Forex Factory is a good site that a lot of individuals use. Investing.com is another site that you can go to as well. And you can go check news on a specific pair, okay, and go see at the time that you're getting ready to trade that currency if there is news around it that could potentially impact the result that you get trading that currency. So you want to make sure that you do that. So matter of fact, I'll show you guys Forex Factory real quick, what it looks like. So let me pull it up. Might as well. Let's see. Go Forex Factory real quick. Share my screen. So this is very popular. We got Forex Factory. So this is what Forex Factory looks like, guys. So here, this is the site here. So you come over here to Forex Factory. I want to make sure my screen is showing, guys. That's why I'm not looking at this screen right now. Make sure I'm showing. That a lot of you see. Okay, perfect. All right, cool. So this is Forex Factory, guys. And when you come over here to Forex Factory, the one thing I'm looking for is the calendar. So I click up here at the top, I go to calendar. Now, when you look at calendar, today was Monday. Today is Monday, October 19th, right? So when you look here, You look here, Federal Chair Powell speaks. So Federal Chairman Powell spoke today at 7 a.m. As you can see on that calendar in the USD, high impact expected, right? So that means, yo, at 7 o'clock, the best thing to do was to stay away from trading the US dollar. So you can see here, yellow, low impact expected, medium impact expected. So for the rest of the day, everything else was like looking pretty solid until 7:30 this evening, which is a couple hours ago. It was high impact news on the Australian dollar. Now, looking at tomorrow, let's say you wanted to trade whatever pair you wanted to trade. Tomorrow is a clean day. It's low impact news all day. So nothing is being impacted. Okay. Now, just want to show you all that really quickly. On the flip side of things, you have individuals who are excellent at trading the news. They do fundamental analysis where they're able to trade the news, right? And that's what they do. The news is their thing. So they wait for news to happen, and they go ahead and trade the news. They wait for news to happen, and they know, yo, okay, boom, this news is going to be high impact. And if the news is negative, whatever that's impacting that specific currency, right, boom, they're selling, right? And some people, that's what their focus is. They crush it just trading the news. So personally, I don't. If something's going on with the news, for the most part, if I'm checking, I'll stay away from it, right? That's just me, because I trade more so. And then at the same time, for the way I trade news, I still go with the flow of my trading style. News doesn't really impact me as much. I trade the other way, and it's technical analysis. Now, what technical analysis is, this is where I would say most people trade. There's a third type of analysis called sentimental analysis. I'm not going to talk about that. So we want to talk about technical analysis. This is the way most people trade when they're trading in the markets. Now, what technical analysis is, this is when you use some combination of market structure, where you're using things like support and resistance lines. So you're using support and resistance lines along with either that or just some form of trend lines, or some type of indicator like Fibonacci, RSI, MACD, just to name a few of the popular ones. And so you utilize these indicators and you use them, and now you go to, as we call it, marking up a chart. You look at the chart, you look at the currency pair, and you look at the movement of that pair, and then now you use your technical analysis, meaning your support and resistance, your different indicators, to mark up that chart for that pair, so you can get a good indication of what that pair is going to do, okay, based off of different things. There are so many different ways. You got what are called top bottom, you got head and shoulder patterns, right? A lot of, I don't know all of them. There's so many different things that you can look at, and based on what's happening in the market, because the market always repeats itself. If you learn to trade, you will hear people say, look to the left, or the market repeats itself. I didn't understand it first, but now I do, because it's just repetition, right? What it did before, it will do again, and it forms somewhat of it has a pattern that is formed. It's repeating itself, right? So by you going in with your analysis and marking up the charts and putting your trading parameters in, you're getting technical with what you think is going to happen. You can't predict what's going to happen, right? But based off of what you see, there's a high probability that what you're looking to happen will happen, based on if you're putting your proper technical analysis in place. So for instance, the market moves three ways: up, down, or sideways. So if you are in a downtrend, right, if you can at some point, as you continue to trade and you look at charts, you can say, oh, this is a straight downtrend. If you're in a downtrend, you can go look at that analysis on that chart and see it's a downtrend. And now you come in with your trade parameters, whatever mark up your charts, use your trend lines, whatever you're using, and you will say, okay, if price continues to move in this pattern, the next move is gonna be a continuation to the downside. So boom, okay, you set it up for that, and then whatever triggers happen, maybe you're waiting for a break and a retest or whatever it is that you're utilizing, and if it continues, if it does what you are looking for it to do and it continues down, you're in a sell. But if it can go vice versa as well, maybe it's a downtrend, but if price hits a certain level, it breaks above a certain area of resistance, as we call it, right? A level of resistance or ceiling. If it breaks that area, then there's a potential chance that price is now going to do what we call a shift in momentum, and then change its direction to become a movement to the upside or an uptrend. Okay, so those are different things. As you continue to trade, you will learn more about these guys. You will figure out as well what type of trader. Are you a technical analysis trader? Are you a fundamental analysis trader? You got to do what best suits you. Okay, so that's what it boils down to. And then even within a technical analysis trader, you're going to find out some people like using a lot of different charts, a lot of different indicators and a lot of different things on their charts to analyze their trades. Some people don't maybe use one or two, and some people use none. I prefer to use nothing but support and resistance. That's what works best for me. I like a cleaner chart. It's also kind of called naked Forex trading, right? Because I just go off of price action and market structure. So that's what it boils down to. But over time, you will fill it out and figure what works best for you. But at the end of the day, if you're going to get in a trade, you got to analyze it. You got to know what you're walking into. Just don't jump in. You can get lucky jumping in, but most of the time, you jumping in a boiling hot water. You're going to get cooked. You're going to get smoked, right? Boiled. You don't want that to happen. So you got to do your due diligence. And it's not difficult once you continue to practice it, study it, and get better at it over time. You will become more skilled and more knowledgeable in your analysis. All right. So, guys, I hope you all got some value from what I shared. I appreciate you guys hopping on here with me this evening. If you are looking to learn to trade, guys, go to tradewithed.com to learn more about the platform that I have utilized for the past 3 years, man, to learn this skill set of trading. And I've been blessed to help others learn through this platform as well. And I appreciate you guys for hopping on here with me. I will be back and I will talk to you all tomorrow. Enjoy the rest of your evening. Take care.